Hello, everyone. Welcome to Nonprofit Accounting 101, hosted by Jitasa. We're going to go ahead and get started. On the agenda today, we have a very simple lesson plan. We're going to start with introductions, have a brief section on why finance and accounting for nonprofits and why it's important. Then we're going to do a deep dive onto the 3 steps to financial accountability, have a session on presenting to your board and funders, and then have a wrap-up. Along the way, if you have any questions, please submit your questions through the GoToWebinar question tool. There should be a little question window on your panel, and we'll be monitoring the questions as they come in, and we'll pause and answer the questions as we go along, just to make it interactive. Okay. As far as today, your host is going to be myself. My name is Ron Kwok, and I'm the Director of Strategy and Marketing for Jitasa. And your main instructor is Mary Soper, and she is the Director of School Development for Jitasa and a CPA. So I think we're in good hands. She brings over 20 years of accounting experience, 14 which were in the nonprofit sector. So I think we have a great subject matter expertise to kind of walk us through the content for today. So hopefully it should be a good session for all of us. So as far as who we are, we're with Jitasa, and we are the first and largest national accounting services provider, and we're exclusively focused on the nonprofit sector. We currently have over 200 nonprofit clients, from federations to startups in every sector. And here are a sampling of our clients. And the good news is I think it really allows us to bring a lot of expertise to the table around this topic. And I think one thing you'll find and probably know by now is that nonprofit accounting is very different than for-profit accounting. And so I think the fact that we focus on that and it's all that we do allows us to really have a really in-depth understanding, serve our clients in that way, but also be able to host webinars and seminars like this to educate nonprofits out there. So I'm going to talk about briefly, why finance and accounting for nonprofits and why it's important. It's very simple. There are risks if you don't do it and do it well, but there are also benefits when you do. And so as far as some of the risks, the first risk that you face is, a loss of confidence from the donor community. And this is a great quote from Carolyn Lynch, who's the co-founder, president, and chairman of the Lynch Foundation. And this site comes from the Bridgespan Group's Give Smart website, which is a great resource on giving, best practices, and just hearing things from the giving community. And one of the quotes that she has in a video on the website is, 2 of the most important lessons I learned as a philanthropist is to first look very carefully at the financial numbers. And before Carolyn gets involved with any organization, it's important for her to understand where they stand financially. So financials is one of the first places she goes to and looks at before she gets engaged and looks at a nonprofit to support and to fund. Another risk is that there's just an increasing number of fines and regulations and scrutiny from the IRS into the nonprofit sector. And I believe before a few years ago, the nonprofit community got a pass from the IRS, and there was some requirements, but they were very loosely held. But we're finding in the last few years, the IRS is actually beginning to revoke the tax-exempt designations for any nonprofit that fails to file their 990s 3 years in a row. And it's actually an automatic revocation. And within the last few years, they've revoked over 500,000 designations from nonprofits as they've enforced this policy. And at the same time, even if you file late, they'll levy a fine ranging from $20 to $100 for each day that tax filing is late. And so imagine if you're, a startup nonprofit or, a nonprofit with a budget of 100 or 200,000, like that fine can be a large part of your budget and can quickly add up and set you back from a budget organization standpoint. So it's really important to keep up to speed and to keep your documentation filings accurate with the IRS. Another risk for nonprofits when they don't do finance and accounting correctly or put in place best practices is just a risk of fraud and putting yourself at risk to fraudulent activities. And there's always studies around that shows that, fraud in the nonprofit sector is something that is a risk issue that needs to be dealt with. And the news is that can really happen to anybody. If you do a scan across the kind of like the events that happened over the last few years, very well-known nonprofits like the Salvation Army, the New York City Educational Housing Services, 3 Cups of Tea, which got a lot of press, they're all, victims of fraud. And so, whether you're small or large, you can put yourself at risk of fraud unless you put in place best practices and controls. And there was a study that was done by the Acosta Center for Nonprofit Organizations, and they found that nonprofits were actually disproportionately impacted by fraud versus a for-profit organization. And they broke up the study by nonprofit size, and they found that the median per fraud incident for a nonprofit with under 100 employees was $98,000. For one over 100 employees, it's about $100,000. And what's interesting there is, the amount of the fraud is about the same, but I think the magnitude and the impact is what varies. Because if you're, again, a relatively small or growing nonprofit organization, and your operating budget is, $500,000 or a few $100,000, getting hit with a $98,000 fraud incident can be really crippling to your program for the next few years, right? Imagine if you lost that income to your budget today, what that would mean for you, right? And the challenge is that, this study found that audits only discover 12 to 14% of fraudulent activity that's out there. So it's not enough to hope that the audit's going to come in and find out later. You really want to put in place, best practices and controls to discover them as they go. And one of those controls is, separation of duties, and other things that you can put in place. That puts in place proper controls, and we find that 2/3 of all fraudulent activities can be identified and captured and corrected early on if you put in place best practice procedures, controls, and a structured standpoint to mitigate this risk. As an aside, Jitasa has a blog and a resource called Jitasa University, which we'll talk about later. But we actually have several articles and postings around best practices that you can put in place to mitigate the risk of fraud within your organization. So we recommend you do go out there and read it and educate yourself, and it can help you put those in place with your organization. Or if you're a client of ours, we work with you to put those controls in place through our process and procedures. So we cover the risk. Now let's talk about the positives and the benefits of having in place a strong finance and accounting structure. The first benefit is around long-term health, and there's this great book out there called The Nonprofit Sustainability: Making Strategic Decisions for Financial Viability, and it's a great read for any nonprofit leader, executive director, or board member. And one of the authors, Jean Bell, who is the CEO of Compass Point, she writes that for nonprofits, financial sustainability and program sustainability cannot be separated, right? And so they'll go hand in hand. So it's not enough just to put in place the proper control, the proper programs, operations, and to have a good plan in place for that. But you have to ensure that the financials that back that up are also sustainable and they work together, right? So, and that starts with having a strong understanding of your financials and where your organization stands. Before you can look at, okay, now how can we grow the organization and make better financial decisions to put in place a better future and to drive our growth, right? So those two things go hand in hand, which I think is a great insight by Jean Bell and her team, and it's really the cornerstone and starting point for the book that we just mentioned. The second benefit is just getting access to funding. And the Chronicle of Philanthropy had this article where it's titled, "The Grant Makers Reveal the Most Common Reasons That Grant Proposals Get Rejected." And they interviewed a lot of different foundation heads. And they found, for example, with the W.K. Kellogg Foundation, that 80% of all grant applications are immediately rejected. And one of the key reasons that they mentioned was just poor financials. And they said it's important for financials and the proposed budget to be right and realistic. And another foundation head, quote, said, when program staff without a strong finance background do the work, details often get missed. It's not enough for the math to be right. It also needs to be realistic. And they would be concerned about the ability to get those kinds of funds if they didn't have that in place. So again, even with funding and foundations for them, like a starting point, just like you saw with the Lynch Foundation, starts with strong financials and a proper view and a realistic view of where you stand today and then going forward. Right. So we talked about some of the risks and some of the benefits. Now, I guess the natural question would be, so in light of that, how are nonprofits doing today when it comes to finance and accounting? Are, for the most part, nonprofits doing it well? Are they putting in place best practices? And there was this 5-year study done by the Indiana University, their Urban Institute Center on Nonprofits and Philanthropy, and they interviewed hundreds of thousands or they surveyed and analyzed, hundreds of thousands of nonprofits. They did interviews, in-depth case studies, and what they found was very interesting. They found, first of all, that 50% of nonprofits do not follow GAAP procedures, processes, and principles and standards. And what's interesting is that 25 to 50% of the nonprofits they looked at report financials that were worse if they did use GAAP, right? And what that suggests is a lack of expertise and not intentional wrongdoing or malfeasance, right? It was just more of ignorance versus trying to, trick the system. Only 16% of the 200,000 plus 990s they looked at properly filed their IRS 990. And 20% of those reported implausible numbers, such as a negative number in the 990 document, right? So there's obviously room for improvement in the nonprofit community when it comes to finance and accounting. And what's interesting about that is, I don't think it's fair to blame the staff or the community on that, because I think there's definitely a lot of challenges in putting in place best practice financials for nonprofits. The first one is that there's just a challenge around bandwidth and time. And you guys, I'm sure, can relate to this. I know myself and Mary can from our time in the nonprofit community in the sector. I myself started a nonprofit several years ago and ran it as a volunteer, and I can attest that that executive directors and nonprofit staff, like we're just forced to wear several hats and juggle many responsibilities. So it's hard to go deep into a function like finance and accounting if that's part of your oversight, because you're juggling so many different responsibilities and day-to-day activities. And along with that is just a challenge of having the expertise to do it well. So even if you have the time, the truth is very few CPAs become an executive director, or very few executive directors take the time to become a CPA or get educated on the finance and accounting, because it's just a bandwidth issue. And as I mentioned before, Mary always says that nonprofit accounting is for-profit accounting and then some, right? And there's layers and different ways of doing it, and people are more familiar with the for-profit world than the nonprofit world. And there's always problems when you apply for-profit principles and structure to the nonprofit community, because they don't go hand in hand, and there's differences and nuances, right? So it's hard to get the expertise and the knowledge to do that well within, many times like the limited resources that nonprofits have today, because the goal is to put as much of their resources and time into programs, fundraising, and execution.